Poorer countries will get access to a cheaper version of Merck's COVID pill. A UN-backed agency has struck a deal with nearly 30 drug makers to turn out the treatment at low cost. The molnupiravir antiviral pill received emergency approval from the US in December. It reduces deaths and hospitalizations among high-risk patients by around 30%. But it costs around $700 per course, making it unaffordable for some countries. Now the new deal should reduce that price to around $20 for 105 developing nations. Merck won't receive any royalties on the low-cost drugs as long as COVID remains classified as a public health emergency by the World Health Organization. There's no word yet on how many doses will be produced, but supply is expected to meet demand in the developing world. Besides the new deal, Merck has also reached licensing agreements with 8 Indian drug makers, including Dr. Reddy's Laboratories.
Once one of the hottest brands in fitness, whose popularity soared during the early days of the pandemic, Peloton is now temporarily pausing production of its bikes and treadmills, CNBC reported Thursday. In a confidential company presentation dated January 10th, Peloton said it had seen significant reduction in demand for its interactive bike and plans to pause production of the product for February and March, according to the CNBC report. It also won't manufacture its treadmill machine for 6 weeks, beginning in February. Shares plunged on the news, losing a quarter of their value in midday trading. The company on Thursday did not immediately respond to a Reuters request for comment. Peloton had sent up a flare in November when it slashed its full-year sales outlook by up to $1 billion, saying that demand for its bikes and treadmills was waning. Analysts have warned of a tough road ahead for the company as people begin venturing out of their homes.
China's ByteDance saw its total revenue growth slow significantly last year. That's according to 2 sources close to the matter. The TikTok owner reportedly saw its revenue grow by 70% year-on-year to around $58 billion, well down on the 100% growth seen a year before. ByteDance did not immediately respond to a request for comment. If confirmed, ByteDance will have followed a trend set by other Chinese tech giants like Tencent and Alibaba. Both have reported weaker performance due to a wide-ranging crackdown by the country's regulators. Authorities have set new rules on how companies like ByteDance carry out deals and interact with their users. Tech firms have also been hurt by lower online ad sales. A report by one local marketing research group said overall growth of online ad sales in China dropped to around 9% last year from nearly 14% the year before. It reported that ByteDance kept its second-place position in China's online advertising market last year, behind Alibaba. One sign of hope came from app tracker Sensor Tower. It said users spent more than $2 billion last year in TikTok, and its Chinese version Douyin well up on a year before.
The Labor Department reported Thursday weekly jobless claims soared much more than expected to a 3-month high. The number of Americans filing new claims for unemployment last week shot up 55,000 to 286,000. That's the biggest increase since last July, and it marked the 3rd straight week that claims have risen, as a record rise in COVID-19 cases disrupted business activity. Worker shortages caused by Omicron through absenteeism, reduced operations, or temporary business closures could result in payrolls gains remaining moderate this month. The economy added 199,000 jobs in December, the fewest in a year. The workforce is about 2.2 million people smaller than before the pandemic. Stocks on Wall Street extended their declines Thursday after an early rally ran out of gas. The broad-based sell-off sank the Nasdaq deeper into correction territory. Thomson Reuters Stocks Buzz analyst Terence Gabriel says technical signs indicate the Nasdaq could tumble further.
The Nasdaq's longer-term trend is certainly been damaged. So it does sort of flip the picture perhaps to more of a sell rallies market. And until some of this uncertainty regarding just how aggressive the Federal Reserve is going to be this year is sorted out.
The blue chip index shed over 300 points, or 0.9%. The S&P 500 fell more than 1%, and the Nasdaq surrendered 1.33%. One of the stocks that soared amid the lockdown, Peloton, plunged on Thursday, losing a quarter of its value. CNBC reported that the exercise bike maker is pausing production of its bicycles and treadmills as demand wanes. Shares of American Airlines and United Airlines fell more than 3%. Both carriers said a recovery in passenger traffic was likely to resume in March, but warned that the latest wave of the health crisis would keep their costs elevated this year. After the bell, Netflix shares fell, wiping away most of their pandemic-fueled gains from 2020. The video streaming company dashed hopes for a rebound after forecasting weak first-quarter subscriber growth.